I think that was correct, right? That was 200 and... yeah, so 2 contracts per. Okay, so I've just taken a long position here with Nasdaq with M and Q contracts. And let's set our stop here. I do expect a high probability of a pullback to one of these fair value gaps that was just formed. All right, so let's first set the stop, which is going to be 75, 3850, 3850. We want it to be exact, 3850. All right, that's going to be our stop. And reason for entering this trade, we are coming from a bullish order block mapped out in both the 15-minute and 1-hour time frame. Additionally, coming from a premium Fibonacci retracement level for a bullish move. We had a gap this morning. We filled the gap. We ran Asia's low. We ran London's low. We've already tapped London's high. So we tapped London's high first thing this morning, and then we pulled back to this level. And then additionally, I have my signals in the lower time frame as well. So let's so that's the reason for entering this trade. We have our stop loss set, and now we're going to figure out where we're going to place take profits. So I'm going to go over to the 15-minute time frame. And so max number of take profits we can have is going to be 2 based on the volume that we're trading with, unless we do get a pullback and then I'm able to add to the position, and then that would change that. But at this current time, that's what that looks like. Okay, so the first place that I kind of expect a little bit of resistance is around the 17. Let me go over to my smaller time frame here. All right, is going to be around 17,255. That is a little conservative for me. So I think more so what I'm going to be looking, where I'm going to be looking to take profit is going to be closer to, I think it's going to be this 17,331.5 level. And let me just make sure I'm sure about this. So the best place to probably take profit would be 17,256-ish area. That's the safest area. Second would be that recent swing high up there Thinking. At 17,255. So at that level, we would already have created, so we've already created a break of structure. But if after the break of structure, at some point, we expect to return back to the fair value gaps. So I would be getting out early. I think maybe this is going to be like, maybe if we could get, this would be perfect. Like if we could break structure right here and then get this return into this area first before we pop up, that would be great. So I think what I'll do is if we get a return back to one or both of these fair value gaps now without breaking this high again, then I'm going to shoot for a target that's further. But if we continue to push up from here and we don't return back to this area first, then I'm going to take the conservative take profit. So I think that's what makes sense. Because I do know that while there's a move here and it might be just like kind of a small move, like I know that we're going to get a return, we're going to get a pullback at some point. Okay, I think that's what makes the most sense. So at this current time, I'm going to maybe I don't even need to set it. So we're gonna tentatively set our limit order here. Tentatively. And so let's see what we get here. Let's see if we are able to pop back into this fair value gap. Okay, so the other issue here is that the other thing that we could potentially see is we could reject off of this 50 moving average and we could just keep going. However, as unpopular as this would be right now, I just think that I'm probably more, it's like the 30-minute and the 1 hour. I think I'm just kind of generally looking for like a bounce in this area. All right, so that would have been a pullback with a break of structure. And then that. there's a strong chance of a huge bearish move coming off of this 50 moving average rejection here. And we do have it on both the both the 3 and the 5 minute. The thing is though, is like if it even if it pulls back, or even if we do get a bearish move right here, we're up against, like we've done, in my opinion, like we've done everything that we need to do down here. We've run Asia low, London low, filled the gap. We have bullish orders building in this area. So even if we do drop down, I'm where would we go? Right? Like what are we drawn to down there? I just don't see it. And then we've got old, what chart is it on? 10 minute. We have like these old highs that have not been run as well. And even if, I mean, it's not, we may not hit those high, like there's from April 18th and April 18th, we have both the Asia high and London high that there's not been a liquidity sweep on. So in my opinion, liquidity is going to be drawn to there at that point, because we've run all of the other short-term highs and lows. So even if we do pull back, I just don't think it's going to be a sustained, I won't call it a pull. I'll just say even if we move down, I don't think it's going to be a sustained move down. That's just my opinion. Now, whether or not I survive whatever move happens, that's a different story, but I'm going to just, let's hold and watch for the moment here. And I'm going to set this up on TradingView. So I like to have the visual in front of my face. 17218.5. All right, so that's our entry. We have a current profit level of 17,331.75, and we have a current stop at 17,138.5. All right, so there's what we want and there's what the market will give. And of course I want a minimum of a 1 to 3. And that's a huge move right now. That's a lot of faith. And so if we went for that most conservative target, that would be, oh my God, that's less than a 1 to 1. It's pointless. Small pullback. Yeah, okay. All right, so if we went for the next target up, right, then that would be a 1 to 1.4. And if we went for the long range target here, then we'd have a 1 to 4 risk reward. It'd be a little less than that because we'd scale out along the way, but it just makes it, if we don't get this pullback, it makes it difficult because there's only 2 TPs that can be taken because we're in the trade with 2 contracts. So there's all that. All right, so this high would be 17,552.50. And I think what I'm going to do is I'm going to follow my rules in terms of placing my stop loss once we get 2 candles that are pushed above my entry point, that are not touching my entry point. And I'm gonna hold the premise of the bigger move, because the smaller, if I break even, like if I go for the bigger move and then it pulls back and I break even, you know, then it's like whatever, fine. But if the move that I'm waiting for to happen happens and I get out of the trade early because I'm more fearful or just trading more cautiously, it would just be such a waste of time. And I'm okay with breaking even if it only hits the smaller target and then pulls back. And then I would just wait for an entry into the fair value gap, and then look for signals in the lower time frame, and then go for my bigger target after that point. But I just don't see the point in getting out of the position entirely at 17,256. The only I'm going back and forth, I really am. Alright, I think I've made a decision. Alright, that's where I'm at with it. Okay, so that puts our final target a little bit above a 1 to 4. It puts the first target a little bit above a 1 to 1. And I like the way everything looks. All right, so first target is at a risk reward is 1 to 1.4. All right, so as we approach this area that I think we could reject at, let's make sure we're following our rules along the way. We're going to go ahead and place a break-even stop for the full load here. That is our new stop. And there's that. Okay, so we've reduced all of the risk in the trade, and now we're just going to let it play out and see what happens. The area that I would be looking to see, hoping to see strength, hoping to see it push through, is going to be 17,255. And knowing that there's a high chance that this breaks back through and targets this one of these fair value gaps, but that's the chance that we're going to take. I wouldn't honestly believe that. I don't know that I'd be totally convinced that this was going to be all the pullback that it would do, but is possible. It is possible. And, you know, with that being said, let's take a peek at the 1 minute and let's just see what that looked like here. So even in the 1 minute, we didn't get a pullback into any fair value gap. We could check the 2 minute. All right, look, we're getting a rejection right there at that spot. Let's see what happens. Let's take a look at the 2 minute time frame real quick. On the 2 minute, I mean, that could have been it on the 2 minute, maybe, perhaps. Well, there's a chance then that it could keep going. All right, let's go back to 3 minute. That is just my preferred time frame to keep tabs on. All right, so we've got Nasdaq approaching the 200 moving average here in the lower time frame, both the 3 minute and the 5 minute. And let's peek over at the S&P and see what's happening. S&P looks the same. And I think the S&P is a little bit above or ahead of Nasdaq right now. So, oh no, they look almost the same. They're like exact. So it's looking, based on this candle, it looks like we're gonna get a rejection here, but you never know. So we're just gonna hold for a moment and just be patient. Don't do that, screen. Nice little push here. Let's see if it actually holds. Let's peek at the S&P, and it does still, we're still pretty much mirroring. Alright, 7 seconds left on this 3-minute candle. Let's see if where we close, above or below this level. Just below. (12:06 New York time). Get a little cautious around this time, especially around 12:30. So we're retesting this 200 moving average in the 3-minute time frame. It's looking kind of bullish. I think I need a few more candles to really know what the plan's going to be. So my indecision is based around the fact that I believe, right, like if we, let me see, 15-minute time frame. So I believe that ultimately, right, this is the gap, by the way, that we came down and filled along with running those, the Asia and London low. But if we look up here, right, this is the order block that this entire push originated from, right? So what I'm hoping to catch is the move all the way back up to that swing right there, okay? However, what I know is that sometimes it'll take off, but sometimes it'll take off, but sometimes we'll get displacement with a break of structure, and then we'll finally actually have the move. So what I'm really just trying to gauge right now is this worth me holding and trying to sit in and see if we have enough, bullish momentum here right now that we've already done whatever we need to do here, because we saw in the 2-minute time frame that we did have like not the most pretty, but like a little bit of a sloppy kind of pullback to a fair value gap area after we created a break of structure. So we could already be on the way back up, but we could also reject here. So that's the indecision, is I'm like, if it looks like we are going to pull back into the fair value gap, right, then I would prefer to just get out around here and then wait for that pullback and then re-enter for that final big move. But if we've already done what we're going to do and we see a bullishness here and we're just going to push up, then obviously I'd want to hold the trade and then just try to ride it out. So that is the indecision. And really I could just let it play out, right, and then just let it hit my stop if it's going to hit my stop, and then re-enter wherever seems appropriate. But if it looks really convincing, like it's just going to smack into my stop, then I'll just take the little profit that I've made and just get out and wait for that opportunity to re-enter. So that's my thought process. Okay, so just watching these signals very closely. The reason why this is the area I would expect to see that in is because we have a bearish order block right here. And in addition to that, we have a bearish Fibonacci. We have a premium bearish Fibonacci retracement level at this point as well. So this line right here, this marks where that order block starts, right? And that's mapped out in the 15-minute and 1 hour time frame. So I want to look at this, I want to look at the 2-minute time frame again. And let's just look here. So remember that these are mapped out, these fair value gaps are mapped out from the 3-minute time frame. Okay, this is not based on the 2-minute. All right, so we have a small fair value gap right here. So we pushed up. Right, so here, let's start back here. So we have, right, swing low. Okay, so here's our displacement. Right here, right, is our break of structure. So after we get that, we're looking for a pullback into a fair value gap. So the fair value gap that it looks like this is kind of coinciding with would be right here. Doesn't look super significant, right? And of course, we've got a fair value gap down here, and we've got another one down here. But that is what we see on the 2-minute time frame. So based on what we're seeing here, it's already met all of the criteria. But I don't think it's very clean. It looks a little sloppy to me, but we have met the criteria. You know what? So I think I've made a decision to hold and let it play out. So I'm gonna consider, even though it doesn't look as neat as I would like for it to look, it doesn't look invalid in the 2-minute time frame. So I'm going to roll with that, and we're gonna hold this trade, and we're gonna look to hit our 2 targets, which is the first TP right here and the second TP all the way up here. Okay, and again, based off of that 15-minute based off of the 15-minute chart. Okay, so that's what we're doing here. So let's let this run in the 15, and I'm going to continue watching it in the 3-minute and the 5-minute time frames. But yeah, that's what we're gonna do. So I've made a decision. I'm solid on that, and that's what we're gonna do. We still have a break-even stop. So worst case scenario, we lose the profit that we've made here so far. I know people watching are always like, take profit, take profit, take profit. But it depends on what your setup is and where your targets are. So if like someone had written in the comment section about, like, hey, when you get a few $100s profit, take off half of that. But the thing is, if I take off half my position size every single time I hit $300 profit, then it's just really putting a cap on my ability to let these moves play out and do what they're going to do. Now, let's say, for example, if I was in this trade with, let's say, 4 contracts per account, right? If that was the case, then I might, I'd probably take some profit right here, and then I'd probably leave, 2 contracts running to this level right here. It does make it a little bit more complicated, a little bit more difficult when you're trading with less volume and trying to let your moves play out, because what it means is, ultimately, it means that you have to allow the trade to ride for a further distance before you're taking any profit at all. But this is where it kind of just boils down to, what is your strategy? What does the strategy say and dictate, right? And you're trading that, of course, within the appropriate market structure. And it's like, are you going to cut all your trades short, or are you going to let them run? If I have a trade where I've got a break-even stop loss, it means that I'm in a beautiful position to take a chance without losing anything. So I can make the decision to get out of all of my trades at a couple $100, or I can actually just trade my strategy and trust it. And what'll happen is, sometimes I'm going to get break evens, sometimes there's going to be losses. But if I allow my 1 to 3 trades, risk reward, my 1 to 3 risk reward trades to play out, and I get even a couple of those a week, and let's say some of them don't go all the way, and I just, I take a little, whatever the case may be. But if I let that play out, what it's doing is it's giving me protection in the long run. Because what I've done for a series of months is, I'll have a good trade set up, get scared, jump out of it early. So instead of getting the full profit that I could, I'm taking a small profit, right? And then let's say, for example, let's break it down like this. Let's say your trade could go $600 total. You jump out of your trade at $200 and you're risking $200 for all of your trades, right? So every time you jump out at $200, you're creating a 1-to-1 scenario, which means every single time you have a loss, you've entirely wiped out an entire win, right? So even if some of them break even sometimes and they don't make it, and even if you get losses sometimes, if you let the trade run out and you can get an average of a 1 to 3 for all of your winners, or at least a good number of them, then when you take a loss, you're only losing 1/3 of one of your winners. And to me, like, that's how you get a trading performance that is goated, right? Where you don't really have to worry about taking losses anymore, because you know that your winners completely eat losses up, and a loss can only touch 1/3 of every single one of your wins. And that's what I'm looking for. I don't want to be scared to execute my strategy. I don't want to jump out every single time I make a couple $100. I know that those gains do add up, but in the long run, if you're not getting a 1 to 3 at least sometimes, you're going to end up upside down. So if you're wondering why I'm not going to just cut the trade short, take profit every single time I hit a couple $100, or reduce the position size by whatever, that's the reason why, right? Is because, yeah, sure, it looks good and it feels good now. Okay, we made a little money, we took some profit, but in the long run, at some point, I'm going to have a trade where my stop loss in the red gets hit, and I need protection against that. And the only way that I can protect myself against that is to actually hold trades. Okay? Does it suck when you try to get 1 to 3s and then it doesn't work out, and then you look back and you go, oh, if I would have just took a, yeah, it does. But this is where, like, this is the difference between thinking like a trader who's trying to just make money right now, and a trader who wants to be in the game for years and years and years, right? If I fast forward a year from now, and every week I can look back and say I caught at least, somewhere between 1 to 3 trades that got a 1 to 3, I can guarantee you I'm going to be far more successful than someone who's taking 1-to-1s all the time, or getting scared and jumping out of a trade just because you get a little bit of profit. So that's my premise on that. I want to be around in 10 years, not just this week. And so there's that. All right, God, I'm fucking rambling. I need some coffee. Okay, and then also there's the people that go, well, why not just trail it? Well, if you trail all of your trades, you're going to get stopped out 100% of the time. So what's the point of even having, like, what's the point of even trading order blocks if you're not going to let it try to run to where it's supposed to go? Right? Like, if I trail this and I put a stop like right underneath this candle, I can almost guarantee you, like, this is going to pull back at some point and hit this candle. Now, whether it keeps going or it continues up, whatever, that's a whole other story. But I would get stopped out in every single trade. It would never work out, ever. Anyway, that's just my premise. All right. And again, if this trade, if we get stopped out, we're going to let it run into another one of these fair value gaps, look for signals, and then take it from there, okay? Okay, and I'm gonna go get more coffee. Need that. Looking good, looking good. All right, let's check on this 15-minute chart here. With all my additional indicators on it. Oh God, that's one of the best cups of joe I've made. Oh my God. Okay, so let's see. So we're pushing up. Great. Fairly close to that first TP. Hopefully we hit it. At this current time, based from my entry, we've pushed 314 ticks. Now I'm going to keep it all the fucking way real with you. That's already a big ass move right there. That's already big. That's pretty fucking big. But we have a lot more to go. But a lot of times I'm shooting for a move that's about this big, but I'm also usually trading with a lot more volume. So I'm happy about where the trade is at right now. I also don't normally let me correct that. I do trade OB to OB, but there are days, right, where you look at your chart and you have an order block that was like, that made a gigantic move, right? And on those days, when you have the big move that's happened, so let's say it's a bearish move, right? We have an order block that's way up at the top. It makes a gigantic move down. And then it creates a bullish order block at the bottom, right? And we get a move up, and that's how we know, like, okay, boom, that's a solid order block. We've seen it perform. And then we get a retest into that order block. And on those particular days, that's when the market has the potentiality to move back up to that far away originating bearish order block, or you can reverse that, however you want to look at it. In this case, we're moving back up to that original bearish order block. So today is one of those days. You do not get those days every single day. I would say that more often than not, you're going to get days where you're trading order blocks that are a part of what do you call it? Like an internal structure, as opposed to like the bigger infrastructure. Hopefully that makes sense. So today is the day that we got the opportunity to jump into a move that could be quite large for Nasdaq. Now, if you trade across a bunch of different instruments, then you might be able to find moves that have that potential, at least maybe almost every day, depending on how many different instruments you actively trade. I pretty much just stick with Nasdaq. Again, it's rare. Like sometimes I'll trade S&P, but it is really, really rare. I can't, like right now, I can't remember the last time I traded S&P. But yeah, so we have that opportunity today, so that's why I'm shooting for the moon here, because we don't get this chance often. I don't normally take moves this big. I don't normally hold this long. I don't normally have the patience or the discipline to do it. I usually will allow fear to overrun me and I'll jump out of the position. So, I was thinking last night, I was listening to Q Banks, and it just helped me to, I don't know, shift a little bit into a different perspective, right? Of like, we're not trying to get rich in a day, in a week, in a month. We're trying to make trading a full-time, long-term profession. And not just where we're like one of those fucking people clicking buttons, making a little profit here, losing it there, making some here, you know what I mean? We want to be excellent, consistent traders with just great structure to the way that we trade. And so I know that for me to increase the odds of me getting to that point of me having longevity in the market where I'm actually seeing significant improvement, not only significant, but I want to improve and then improve on top of that and then improve on top of that. So for me to get to that point, the structure in which I trade in, it needs to be solid. It requires so many layers to put this together, right? It's like, even before we get to the trading part and the clicking the buttons and all of that, it's like, there's a lot of stuff, right, that goes on in all of our lives behind the scenes that has nothing to do with trading directly, but does affect it, like, significantly, right? If you don't have, even if you're trading prop, if you don't have the money to even be able to take the chance on, get it, entering into evals and seeing how you perform, that's problematic, right? If you have like a financial event happen in your life that really sets you back, or it could be something that happens with your family or something that happens with you, whatever, just something in your life that creates like a negative, these are all things that we have to like battle and push against just in life, even before we make it to the charts and we make it to the live market, right? So there's always all this stuff going on in life, and we have to figure out how to balance all of that, and keep ourselves in a good mental state and continue learning and be able to take L's and still keep going. There's so many things that we have to balance as traders. So, one of the best defenses that you can have is trading a strategy that allows for a minimum of a 1-to-3 risk reward ratio. It saves you from so many things. It saves you from mistakes that you make. It saves you from when volatility just fucks you up in the market. It saves you from, when you have a bad day and maybe you trade when you should, you know what I mean? Again, when you have the defense, when you have the armor of it takes 3 losses to equal 1 win, and you have a decent win rate, you're really setting yourself up for just a beautiful situation. And that's easier said than done. It's really hard to get to a point where you can even hold a trade, like even this long. This looks like a small move because we're looking at it right now in the 15-minute time frame, right? But if I drop down and we look at this in the 3-minute, right? That makes it, right? Like we've been holding this for a minute. And this is difficult to achieve. It's difficult to get to the point where you will allow a trade to run this far, right? A lot of people trade in the 1 minute. Let's look at it in the 1 minute. Look at this. This is difficult to hold. Just based on psychology, not anything else. Just based on your mental and emotional ability to fight the desire to get out of this trade with your money as quickly as you can. This is difficult to do. This is not, we don't do this as beginner traders, right? We don't, let's be honest, we just don't. So anyway, and then like this is our 5-minute chart. But again, we've been holding this trade for a minute, okay? And regardless if this trade turns out to be a winner or a loser, this is big boy shit. Or in my case, big girl shit. So, anyway, I want to be a trader who can hold trades. I don't want to be a trader that feels like I need to jump out of trades every single time it feels a little bit scary. The market is fucking scary. The market is terrifying. You have to abandon that fear. You just do. You just do. Make a decision. Who are you going to be? What are you going to do? And then when you make that decision, commit to it. If I get a big ass red candle right here, right now, and it takes me out, it is what it is. Make a decision, commit to it, and that's it. So, like, if we focus on psychology, right? Like right now, my brain is doing two different things. My brain's like, number one, lower that first TP so you can make sure you hit it, right? And then there's the other part of my brain which goes, we're really close to hitting that TP. Why don't you just like move it up a little bit so we can just make a little bit more on that particular contract? What are you going to do? Who are you going to be? Fight it. I even held this through a bearish order block. Wow. Who am I? I don't know though. I'm probably just gonna go away from the screen. Sometimes sitting at the screen just makes you just want to exit trades. It makes you panic, and I just don't know if it's helpful right now. So let's just continue to give our trade more time. If you fast forwarded the video and you didn't watch the beginning, this is a trade with M&Q. I'm trading micros, 2 contracts per account. Max risk that was taken in this trade was $350 per account. And at this current time, we're shooting for, in total, a 1 to 4 is where the final take profit is set. This is an order block trade originating from a bullish order block. We had a gap this morning. We had a London and Asia low. We ran the London and Asia low. We filled the gap that was made. We had a bullish order block. I got my signals in the lower time frame, which for me is the 3-minute and the 5-minute. And I like to see them completely agree with each other before I enter the trade. That is the reason why the entry is a little bit late. But once I get those signals, the entry is so solid to me that it doesn't matter if it's a little bit late. A lot of times I would have I would have taken profit already because we're beyond 300 ticks in this trade, which is incredible. But again, we have the opportunity today to potentially run a really wide order block play, and that's what I'm shooting for. And yeah. All right, so I'm just gonna walk away from the screen for a little bit and give this some more time. I'll check on this. I'll be watching this from my phone. I'll check on it in a little bit.
Order filled.
All right, so TP1 is hit, so let's just adjust this stop loss to reflect the actual volume that we're still left with in this trade. And again, we're just, I'm not trailing this trade. I'm leaving my stop down here, and we are now shooting for this target up here. Things that I'm concerned about or would be looking out for with where we're at in the market right now. So, it's 15. 1 second. All right, so what could happen in this potential area? So in this area, we've got a break of structure right here. So this is definitely a spot where we could see this trade lose momentum. Because we could just completely start moving back down, or we could just pull back into like a fair value gap, you know, some kind of liquidity void. So that's definitely a possibility. So let's take a look now at the smaller time frames, my 3 and my 5 minute, and they still look very bullish to me. A lot of people wonder about, like, because everybody's going to look at the market today and go like, why are you in a long position when the market sentiment is so bearish? Well, this is the thing. I'm not a perfect trader at all. However, if you understand like how to look at and dissect market structure, then you can have successful counter trend trades. And like for me personally, like for today, right? Because I'm a day trader, I'm very bullish right now today. But I just like to stay fluid with the market and see what it's doing, and then just like watch, and based on my rules take entries and my exits based off of that. But like there's a great chance that this move here is just a pullback for the higher time frame to continue moving back down, right? So if I were maybe a swing trader, then this probably wouldn't be a trade that I would be taking, right? I would more so want to wait for that pullback and then short the market. But I'm a day trader, so it means that I get to try to take advantage of all of the fluctuations that are happening in the market if they seem like a good idea. So today, or I should say right now, I'm bullish. The beginning of the day, I started out very bearish because we had a gap to fill, and we had the London low and the London and the Asia low that we needed to create, you know, liquidity sweeps on. So early this morning was very bearish. However, once we filled the gap, once we ran those lows, and I watched price action, and then everything followed my rules in such a way, now I'm bullish. So everyone has their own, preferred way of trading, and there's whatever, do your thing. But this is just how, I guess this is just how I think of the market and how I look at it. And I like to be able to counter trend trade to the higher time frame premise. I like to be able to do that because it means that every day, almost every single day, even just on Nasdaq alone, I am going to have the opportunity to be able to take a trade and make money. And that style is geared to my personality because I like to be in the market. I like to be active. I want to trade every day. I want to trade Monday through Friday, almost every single week, preferably. So it matches my personality and the way that I like to trade. So again, like for someone else, you might not be your thing, or you might not see the market that way, or it might not seem like an intelligent move or decision to you, right? Like we all have our different ways of looking at the market and things that we believe in, and things that have been proven and disproven based on our own experience in the market and different mentors that we've learned from, etc., etc. But today I'm bullish. So, or right now I'm bullish. The next spot that I could see, first of all, we could have a rejection right here just because we've already broken structure and we've hit that that high of the day. But if we are able to make it through this area and we do okay with that, the next area that I would be looking at as maybe problematic if we're able to make it through this area is 17,38725. It's not exact, it's just, but in that area, 17,387. I'm gonna mark that. 17,387. What did I say? 25. Jesus Christ. Right there. Okay. All right, so that spot right here. So right here, as you can see, we're in the 15-minute time frame. So this is a great visual, great depiction of other areas that we have that we could reject at. Okay, so we have right here, I don't want to start marking up the chart, but fuck it, let's mark up the chart. I'm going to get rid of this stuff, but we have right here bearish OB. We have right here bearish OB. So this whole area right here is potentially problematic for a long. Okay? So the likelihood of us getting some sort of rejection right here is really, really high. So there's options, right? We could exit this trade right here, and we could even short it. We could short it until we think the short is over, and then we could try to hop back in the long. I don't really feel too crazy about that. I'm not really into it. But that's a possibility. Okay, we could do that. We could just exit and be done for the day. We could exit this long, and we could try to do a short right here. We could, right? Those are options. We could just move our stop, right? And we could kind of start to maybe trail a little bit if we wanted to. However, if you get rid of the fear, right? If we hold on to our original premise, which is that this order block right here, okay, that's in this area, is where this move originated from, right? We had a pop up. So you can see previously we hit this order block, this bearish order block 2 times, and we rejected both times. Pulled back into this bullish order block, and we've been able to make it above this level, at least at this time for now. So, but if we keep our original premise, right, which is that this move, right, this order block coincides with this order block, then what we would do is we would just continue to hold the trade. Again, if I had more contracts in this trade, I would scale out a lot more cleanly, but I just don't. I went in with very low volume, so it just is what it is. But that's what we're holding on for, and that's what we're shooting for. Okay, so we're going to just try to fight the temptation of getting out of the trade right here, and we're going to just try to continue to hold the trade and believe in our original premise. So we'll see how things are looking when it hits this spot right here. But I mean, at the end of the day, the idea, the premise is that we're basically we're riding this bitch until the wheels fall off. My trading buddy wants to see my trade. I think he's bearish for the day, so he doesn't know why the fuck I'm holding a long. He said, damn, you might as well be a long-term investor. My God. All right, scalper. Okay, so let's, I'm just going to get rid of these. We'll just continue to hold and give it time. He said, let me know by Friday if you hit that TP. Those guys talking shit. Alright, I left my coffee somewhere, but I'll check back on the trade again shortly here. So we have a slew of, like we talked about before, we have a slew of potential areas here kind of just stacked on top of each other that could potentially be reversal points on the way back to this OB that we're shooting for, with Nasdaq, with M&Q. So we're just watching closely and just looking to hold through this resistance that is here. Now, usually when you when you hold an order block trade that's this big, at some point you will typically get at least one gigantic pullback that makes you like want to piss yourself, right? And sometimes you'll get like two, and sometimes they're not just pullbacks. Sometimes they just, and then boom, trade's over and you just lost all your profit. But we're going to try to hold through. We're going to try to hold through everything. Things that give me a little bit of confidence to, or I guess some extra confidence to continue to hold this trade. If I drop down to the lower time frames and I look at the 3-minute and the 5-minute, this trend right now, at least in the short term, this trend right now is so strong that we haven't even broken, excuse me, fucking dying. We haven't even broken the 10 moving average since we popped up above this high right here. We haven't broken the 10 moving average. Again, I expect there to be some kind of major pullback in this trade, but that does give me confidence, right? That gives me extra confidence to continue holding the trade, because that's obviously an indication of a very strong trend. Other things that I look at in the lower time frames, I look at your typical indicators. Most consistently, I'm looking at the RSI, MACD, and the stochastic. Those are my three that I really like to use. And the stochastic in both, obviously the 3 and the 5-minute time frame, very bullish. Small pullback and then just kind of boom, looks great. Nothing throwing me off. It looks very clear. MACD looks good. It's showing more strength than when this move originally started. So that's maintaining quite well, and that makes me feel good. And the stochastic, or I'm sorry, not the stochastic, the RSI. The RSI is super fickle, right? Like, it literally just, whatever's happening in the market, the RSI is like do, right? It's very fickle. However, there are certain things that you can look at with the RSI, like the signal on the RSI, and there's also these overbought and oversold regions where you can see these small indications of like whether or not it's highly probable that a move is going to continue in one direction, or if it's more probable that it's going to experience weakness. And of course, like that, it's the RSI that can change at any given time. I'm not as well versed with using these. I don't really use indicators for the higher time frames. When I look at the higher time frames, I'm just focusing on the actual market structure and price action. But in the lower time frames, I like to look at these indicators to give me little pieces of information. And for me personally, like, because I know everyone's like, oh, indicators are lagging and sure. However, even if something is lagging, if you've been watching it for 3 years, there's a good chance you have a decent feel on how to read it, what it means, and what you typically see in the market with price action once you see that particular signal, right? And I have been watching all three of these indicators for 3 years. I'm not saying I'm necessarily an expert, but I just have little things that I go by that just tell me little things, right? So I use that experience to my advantage. And usually when I use those things as a guide, they are usually helpful. But anywho, thus far, let's see, let's go back to the 15-minute time frame here on my trading view. So thus far in this trade, we are, oh my God, oh my God, we are 780 ticks deep into this trade. Wow. That's crazy. Oh, shit. Let's see what happens. So this is when I start thinking, and then potential bad things happen. So what I'm thinking right now is maybe I edge my stop loss up. To about maybe around right here, below this level right here. But the thing is, if this trade pulled back, where do you think it's pulling back to? It's probably coming around here, and then if it were going to turn around, that's where it would you know what I mean? So it's tough. It's like, again, it makes it so much easier when you do have more contracts in the trade, because you can just very uniformly scale out of the trade. We got out of the first contract right here, and that left my next area of major interest all the way up here, right? So like in a more perfect world, I would love to take profit here, take some more profit around here, and then maybe even some here and then here. But because I am just left with the one contract, it just leaves this huge gap. And I know that some sort of pullback is coming. And I know it's going to be deep. Thinking. don't know. So I'm having trouble just like being okay with like continuing to just hold the trade without moving anything. I'm feeling stress. I don't think I've ever had a trade go this might be the biggest trade that I've ever been in terms of not profit, but distance. So I'm losing my shit a little bit. I can feel the anxiety is just and I know a big pullback is coming. I know it is. Oh my God. I'm fucking tripping. I gotta figure this out though. Leave the trade alone or move stop loss up. Or exit the fucking trade entirely. Okay, let's try to hold it the fuck together. All right, so it's 2:21 New York time. Why does it feel so hard all of a sudden to hold this trade? You know what? It's because I looked at the profit. That's why. I looked at the profit and then I thought about losing the unrealized profit, and then I freaked the fuck out. What's more important? Me building the strength to be able to hold a full trade, or taking this profit? Taking this profit is important right now, but I'm starting to feel physically sick. I don't know if I can sit here and watch this. I know that every single time I see a trade like this, I think to myself, I look at it and I go, hey, look, Courtney, this is all of the shit that you would have had to hold through in order to get to this TP. I try to prepare myself for it. And typically what I say when I'm back testing is that if I would have just taken the trade, set the take profits, leave my break-even stop loss just right above the entry, the trade would have been great. That's usually what my determination is. So then that brings us to, do I want to be emotional, or do I want to be logical based on objective findings that I've had historically? But then also, if I did lose all of the profit in this trade, would I look back on this and go, what the fuck was I thinking, holding through 1, 2, 3, 4 bearish order blocks? What the fuck was I thinking in an economical climate like right now? I don't know. And not only that, but the geopolitical climate is fucked up. We're literally on the brink of fucking war. So, if I don't try, I can't get it. So I'm going to rest with the logic of I'm going to hold the trade, and we're just going to continue to ride this shit, whatever fucking happens. What else? I mean, I don't know what else I can say. I don't know what else makes sense. The patient, calm, non-emotional me would probably just hold the trade. The only reason I want to dump this trade is because of my anxiety, my emotions. I have to walk away. Okay, it's 4 o'clock, so we're gonna set a, what do we want to do? Do we want to just get out of this trade? I'm gonna get out, I think, because it's 4 o'clock. I don't like to hold beyond 4. Let's see, stop, 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 for correct amount. There's the stop. All right, yeah, it's 4 p.m. New York time. Am I? No, it's not. I'm tripping. Hold on. It's 3 o'clock. Oh my God, I'm fucking tripping. Should I still just get out? Because it's 3. This could be like when it pops off, or this could be when it starts a whole other move. Okay, kill that. We're back here. There's the stop. I'm fucking tripping. Jesus Christ. Okay. My alarm was set for before the time change, which is why I just thought it was 4 o'clock New York time. I was kind of relieved because I was like, oh, I could just get out of this trade now. I don't have to. Why is Trading View looking crazy right now? Like, what happened to my... I don't know what happened to my, how I set everything up. Did I mess this up on my phone? What did I do? What the fuck? Weave touched me, flipped up. My bad, I thought. Okay, no, don't change the interval. I'm on edge. Alright, so that is fixed. And I just want to pull this down. And cool. So we created a bearish fair value gap on the 3-minute time frame. So that's interesting. And annoying. And it's at 2 o'clock. It made it at 2. Oh my god, at this point, it just really takes a lot of fucking balls to fucking keep holding for this move. I'm just stressing myself out at this point. This is how it goes. Remind myself again. I'm riding this bitch until the fucking wheels fall off. Okay, so now I gotta set another alarm. 12, 1, 2, 3. It is 3:15 New York time. So at 1300 my time. That's when I want the alarm to be for. So actually let's do 12:55 save Okay. So 5 minutes to 4 would be the latest that I would hold this trade if it hasn't hit my last TP by then. Did you hear that hard swallow? I'm physically fucking sick. I'm walking away. right, so what I don't want to see is, I don't want to see it come below like this level right here. So I'm going to put a stop right there, because if we pull back below this point right here, then this invalidates something else that I'm seeing on the chart. And then I would just want to be out, because at that point, I think we're just going to, I think we have at that point a 3 o'clock move, which is going to just completely fucking plummet. Okay, so that's my stance on that. Wow, look how much further we still have to go for this TP. This is crazy. I hate that it took so fucking long. But at the same time, I'm glad that I'm seeing what I am seeing, because I know, based on what I'm seeing, that if this gets violated, I am pretty sure we are plummeting to a place where I don't want to have to be in the trade and try to fight to get back while we have minimal time on the day, because it's the end of the day New York session. So let's see if this spot gets respected, or let's see if we get run through. I'm so glad it looks the way that it looks, though, because it just gives me such a nice spot to put a stop loss in, that I think makes so much sense, and I don't think that it interrupts the trade. And I really feel like if that stop gets hit, I think that a further move up, at least with the amount of time that we have left on the trading day, I really think that holding the trade becomes invalidated. I feel really grateful for that. So we'll see what happens. So that gives me just a really nice tight stop. But it is, it's 3 o'clock. So, 2 minutes to 3:30 New York time, actually. So I'm really hoping to see a good, like, nice big push up to the top. Might not happen, but of course I would love to just see like I would love to see Power Hour go crazy with a move up. I like that though. That's a good way. I like that for the idea of like how to trail big moves, or maybe not trail, but where to place a stop for your full load that you feel wouldn't necessarily interrupt the trade, but would at that point be a necessary point of invalidation to get out at. Add that to my journal here. Today is, what's today? Are we gonna fall through? I think it's gonna fucking fall through. It touched the fucking 50 moving average on the fucking 3-minute time frame. So what that means is that it'll probably do like a small little pop up, and then it's going to drop down hard on the 5-minute time frame to touch its 50-minute or its 50 moving average as well. Ugh.
Stop filled.
It's over. Okay. I cannot be mad. Good ass fucking trade. Could also have gotten out around the this 3-minute fair value gap right here. Could have gotten out right there too, just because fair value gap created around fucking power hour, and a bearish OB pops back into it and actually pushes back down. You kind of know it's, you know, oh wow, it is plummeting. All right, well that's it. I think I did a good job holding that, and I think that where I placed that stop made a lot of sense, and I'm super happy with this trade. I'm very proud of the move that I just held. I've never held a trade this big this long, so this is commendable for me. So much better than scalping. This was a overall enjoyable experience. All right, until tomorrow, guys.